Okay, we're going to get to the last thing in chapter 4. So we're starting on the bottom of page 9. So in this chapter, we've learned about adjusting entries that are done at the end of the end of the chapter, the end of the accounting period. And once we finish the adjustments, we go in and do our financial statements. And so after we have prepared our financial statements, the last thing we have to do is prepare closing entries. Okay, so what are closing entries? Those are entries used to empty accounts that are called temporary accounts, and we'll go over that in a minute, at the end of an accounting period, and transfer their balances into permanent accounts. So why do we do this? Why do we even need closing entries? We want to, remember me telling you, you got to zero out the income and expense accounts at the end of every year so that you can start with a clean slate. That way you can track year to year how the business is doing in that particular year. You don't want to just keep the sales numbers and expense numbers just building year after year. You want to be able to differentiate like between years. So that's why we do it, because only 1 year of transactions should be showing at a time in those what we call temporary accounts. So let's talk about the difference between a permanent account and a temporary account. All right. So permanent accounts are going to be your balance sheet accounts. They're going to be accounts that we don't ever zero out. We don't ever close out. You may see them called real accounts. That could be like a multiple choice question. So, make note of that. So just think about your balance sheet accounts being the ones that are permanent. We're not going to zero those out. So cash, receivables, equipment, payables, capital, just some examples. Temporary accounts, you might also see them called nominal accounts. Their balances, we don't want to carry those forward from year to year. So we're going to have to zero those out at the end of the period. So that process is called the closing process, or closing the books. And we will make closing entries to make that happen, that zero those balances out. And that's going to be your income statement accounts and your drawing account. So any of your fees, earned, service revenue, any revenue accounts, and then any expense accounts, all of those will be cleared out. So those are your temporary accounts. They're called temporary because they only open, you only got 1 year at a time in them. Okay, so let's do an example where we kind of identify what's what. So from this list, let's identify accounts that should be closed. And again, closing means you're going to zero them all out, and whatever was in them, you're going to move it to the capital account. So ultimately, what you're moving to the capital account is net income or net loss. Okay. Too much for a Monday morning? It is for me. I'm sleepy. I don't know what's wrong with me. Too much sugar this weekend, I think. Drains my energy. Makes me sleepy. Okay, so accounts receivable, would it be a permanent or a temporary account? Permanent. So it would be closed. So how do we want to do this? I'll say permanent, yes. So just tell us to identify them. So we could circle that one. What about accumulated depreciation? Will we close it or not? Where is it showing? Where are you going to find accumulated depreciation? Yeah, did somebody say something? I heard a low rumble. It was so low, all I heard was the tone of your voice. I couldn't hear what you were saying. So, not closed. Sorry, y'all. Permanent, not closed. I circled it. Okay, so what about building? Is the building closed or not? Permanent. So we'll put permanent, not closed. What about depreciation expense? Would you close it? Yep, it's going to be temporary, so we would close it. Now, I should have circled that one. Temporary. All right, what about fees earned? Yep, it's temporary as well. What about Jackie Lindsay Capital? It's permanent. What did y'all say there? It's permanent. It's a balance sheet account. So we're not going to close it. In fact, everything gets closed into that account. All right, what about Jackie Lindsay Drawing? It's temporary. All right, what about land? It's permanent. What about supplies? Permanent. What about supplies expense? It's temporary. So yes, we would close it. What about unearned rent? What kind of account is unearned rent? It's a liability. So where would a liability show up? What else? It's permanent. Yeah, it's the closed. Remember when it says unearned rent? If it said earned rent, yeah. But usually it's going to say rent revenue if it's the revenue account. So it's not saying earned rent. That's really not the name of the account. So, but it's a fair mistake to make. What about wages expense? Yeah. Okay. Easy enough, right? All right. So another exercise: identifying permanent and temporary accounts. So let's go through the same thing. It's the same thing. It's essentially the same thing. Good practice. So accounts receivable, is it permanent? Which ones are permanent? Accounts receivable is permanent. Cash. Capital. Yep. Anything else? That's it. Okay. So, because it's asking which of the following accounts will usually appear in the post-closing trial balance. If you were to have that on your question. So far we've done an unadjusted trial balance. We've done an adjusted trial balance. And the last one we'll have is a post-closing trial balance. Post means after. So once you have closed the books, the only thing that'll be on your post-closing trial balance is your balance sheet stuff. So it'll be real short. That'll be the best one yet because it'll be that long. You're just going to have assets, liabilities, and your equity account. So all of this will be zeroed out. It won't be, the expenses and revenue will be zeroed out. You won't have to do that. Put those on there. All right, so there's 2 closing entries. This is super important. Memorize it and brand it in your brain because this gets very confusing for some folks. It's really not hard. It's just a little backwards from what we're used to doing. So you just need to kind of think about why we're doing it and what we're doing. So in the first one, we're going to zero out our revenue and expense accounts by debiting our revenue accounts. So revenues normally have credit balances. So if we debit the revenue account for whatever's in it, the net effect is going to be zero balance. Then we'll credit all of our expense accounts individually, have to do each one, and then whatever the difference is goes to your capital account. Now, if you had a net income, you would wind up crediting the capital account. If you had a net loss, you would end up debiting the capital account. All right, then the second entry is to zero out the withdrawal account by debiting capital and crediting your drawing account. And remember, the goal of this is to zero out the balance of these things. So we're going to do the opposite of what we would normally do. All right, so we have example 8 here. And our instructions say after the accounts have been adjusted December 31st, these are the balances from the ledger. So we need to journalize the closing entries. There's like no instructions there. Okay. So we are journalizing the closing entries. Oh, I didn't put that on there, but what else would we do with it? All right, so our date's going to be December 31. And remember, we're going to have 2 entries. The first one, we're going to zero out our revenues and expenses. So fees earned is what we'll put first. 1,690,000. Okay, and I'm going to tell you here to skip a line because we don't know if we're going to have a net loss or net income to put to capital in the way Cengage does, y'all. I'm going to skip a line so we can go back in and we can put capital here. In fact, you could just go ahead and put the name of it, and we'll put the balance, we'll put the amount in a minute. I didn't touch you. The sleeve must have touched it. So just go ahead and write the name of the account, and we'll come back in a minute and put the amount in. Okay, so then list all of your expenses and credit those. I know I told you you'd never credit an expense account, but this is your one exception. Not in the normal course of business you want. But this is the end of the year, and we're closing these out so we can start next year with nothing in there so that we can see year over year how we are doing as a business and what our expenses are related to each year. Okay, supplies, $27,250. And then miscellaneous expense. Okay. So if you were to add all of your credits, you're not going to equal that debit. So what do we need to make that entry balance? What would we need to plug this line with to make your debits and your credits equal? You got to add them up. Add up your credits. Subtract it from your debit and see what we're missing. Because this is kind of the thing. If you're not sure what to do with capital, like what am I doing here? You know you have to debit your revenue. You know you have to credit your expenses. Your capital account is going to be the plug to make your entry balance. You're more than likely going to have more debit total than credit total. So you're probably going to need a credit to make your entry balance, right? So how much do we need to make our entry balance? 662,970. Okay. So just by looking at that, did this company have net income or net loss? If it increased capital, income, they have pretty nice size income. Okay, so that's your first closing entry. If we were to post this to the ledger, We would debit fees for that amount, and our new balance would be 0. And the same thing with credits. Now, capital is just going to get bigger. It's not going to close. It's going to get bigger. All right, so the second closing entry, we've got to zero out our drawing account. So we're going to debit our capital account because we have to credit our drawing account to make it go away. And all of these closing entries are affecting the capital account. All right, so your drawing, we're going to credit $90,000, and we're going to debit capital $90,000. That make sense? No. Well, at the end of this whole exercise, we're going to do the closing entries for Net Solutions, and you'll see how they fall out. Do y'all have that? You don't have that problem because we sorted it when y'all were in class that day, didn't we? That Net Solutions with the ledger and all that. I gave it to y'all as a separate problem at the end of 3.
We did the journal class.
Huh?
We did the journal
Yes.
class.
Yeah, that's it right there. Okay. Kind of wondering if we should do it now. It might make more sense to you why you're doing this. Yeah. All right, let's do that. So kind of get that Net Solutions problem handy. And if you're watching this video, these pages are posted in the module. They're called Net Solutions Closing Entries and Post-Closing Trial Balance. All right. Your holes are like punched way too far out like that one. That bugs you. Probably got replacement holes and all. They were not lined up or properly lined. Put some holes, so it didn't go well. I have those little sticky reinforcement things. I already account on me. I used to go through boxes of those things. When all of our work papers were paper and not in the computer. Okay, so let's see, where's my problem? All right, so we're going to be using our ledger from our Net Solutions problem. Or, I mean, you could use the trial balance as well, just wherever you can get the balances from. Okay, so just kind of keep that, keep your thumb on this so we can go back and forth. But we're going to be focusing on here down. So your drawing account down is what we're working on. All right, so there we go. All right, so the first page of this thing. Let's do the closing entries for Net Solutions. And their year end was December 31st, so put December 31 up here. Well, all right. So what is the first thing we're going to do?
Put on the is it fees earned?
So we're going to write fees earned first. What are we going to do with fees earned?
Yeah.
Debit, how much? $16,840? that what y'all have? Okay. The next one, rent revenue. We're gonna debit 120 because it's got a credit balance. Okay, now remember I said we don't know, he's gonna have a credit. We know he's got net income, right? So if you know they've got net income, you can wait and put capital at the bottom. I'm just trying to save you some headache with the whole Cengage thing. All right, so let's just go ahead and list our expenses. We got wages expense. Now what are we gonna do with this one? We're gonna credit 45.25. All right, and then supplies expense. Credit 2040. And then what's next? Rent. We've got 1,600. We've got utilities expense. $985. Insurance expense. $200. Depreciation expense. $50. And finally, miscellaneous expense. $455. So we know the difference is going to go to the capital account, but how much is that going to be? Well, if you're at the point of making your closing entries and we've already done financial statements for this problem, you can look at your financial statements, see what the net income or loss number is, and that should make your entry balance. We haven't done that on this last problem, so we don't have that number right in front of us, but we can just add up our debits, add up our credits, and see what the difference is. And that's going to go to Chris Clark Capital. What'd y'all come up with? Anyone? So you tell me you knew Walker Birchfield? No, it was somebody else. Another baseball.
I don't know if it wasn't me.
He used to come in here in the morning. Not that she looked like that, but you know, he had that crazy hair. You could tell when he rolled out of bed, that hair was going all over the place. Sometimes I look at Tom and think, y'all just rolled out of bed.
He's just saying, I got about 15 minutes before class.
That's where a hat's gonna have. Your hair's not crazy like this. You just have one little sprout sticking up in the back. You don't look like you just rolled out of bed. What? One more time. 7105. Anybody else get that? Is it a credit that we needed? Anybody else get it? Yeah. Okay, so that would tell me he had net income because it's increasing his capital account. If it was a debit we needed, he would have had a net loss. Okay. But like I said, if we had just done if you're doing the whole thing from beginning to end, you're going to record their transactions, post them to the ledger, do an unadjusted trial balance. Then you'll do the adjusting entries, post them to the ledger, do an adjusted trial balance. Then you'll do the financial statement. So you'll have the income statement, the owner's equity, balance sheet, but you'll know at that point what your net income or loss is. So that number there should be your net income or loss, because the difference between revenue and expenses is income or loss. So if that number is not the same thing that's on your financial statements, you'll know you made a mistake somewhere. Just kind of a check figure. All right, second entry. We're going to debit Chris Clark Capital and credit the drawing account. Okay, so how much was his drawing? 4,000? Yeah. Okay, so let's go through the posting process and put these on the ledger. So I want y'all to see like what this looks like once you post it. So we've got our ledger here. I think. There we go. All right, so our first line of our closing entries was to debit fees earned, right? And I guess we could assign page 6 to this thing. So just put a page 6 on there so we'll have a reference that is a little bit different, so at least we can see what we're doing. Okay, so the first thing we did on our entry was to debit fees earned. All right. On the 31st, now here you're going to write closing. This is the only time we write anything in the item, is adjusting and closing. Put a 6 because that's where our entry is coming from. And we debited fees earned for, make this small, 16,840, right? So if we combine a credit of 16,840 and a debit of 16,840, we end up with 0. You can put a line there, you can put a 0, whatever you want to do. Sometimes the instructions tell you to put a line, but 0 is fine. I can write as legible 0. Okay, so account number 41, we'll go back to our entries and we'll put a 41 here. The next thing is to debit rent revenue. So we'll put a 31. We'll write the word closing here. Our page 6, we're going to debit rent revenue. So if we combine a debit and a credit, we end up with 0. They're both the same amount. So you see what we're doing? Okay, so count number 42, we'll take back to our journal and put that there. Wages expense credit is the next thing. Write the word closing. And we're going to credit wages expense. So if we combine a credit of 45.25 with a debit of 45.25, we end up with 0. Count number 51. So y'all kind of get the idea of what we're working with here. Okay, supplies expense. I'm gonna keep rolling. Y'all stop me if you get confused. But I think y'all got this part down. Yeah, 16.
You said offers.
Yeah. Make my big head out of the way so y'all can see. Good. Okay, so 31st on the rent expense. Closing. 16. 6, 1,600, 0. Good. We're gonna go back here and put the 53. Ah. Good. Did you get that one? I can always go back to when we get through and show you everything again. That's it. 7105. You good? Okay. We're gonna go back to capital and put our 7105 here. Oh, I didn't put enough lines on here. We're gonna have to do the one for drawing up underneath it. Let's see, 32,105. Okay, so that's our first entry. We gotta put our 31 here. Then we'll post the second one. So we know that's 31. I kind of cheated, but it'll be all right. And we know this is going to go here, so I just didn't leave enough lines, sorry. So we'll have 28,105. And we're going to go back here and put our account number in. Okay, anybody need to look at anything
The capital on the ledger.
on the ledger? Everybody else got everything? Yeah. Okay, so y'all see what we're doing. We're trying to make everything 0. And what we're left with is capital and everything above it. Okay. So the next thing you would do in the process is prepare a post-closing trial balance. So we're going to take our ledger, take the balances off of it, and prepare that last trial balance. So it's the last phase, I guess, of the trial balance. So let's go all the way up to cash. There we go. Come on. All right, so we've got cash, 2,065. That's not what I'm looking for. Okay, so y'all, I'm not gonna keep flipping back and forth because you've got your ledger, you've got your balances in it. That's what we're gonna use to prepare this post-closing trial balance. I think it gets kind of. Where the heck did it go? chapter 1. No. This thing has a mind of its own. All right, so at the top of it, we're gonna do like we always do and put the company name. And we're gonna put the date that we're preparing this for. Like, what are these balances? What date are these balances for? These are our December 31 balances. Okay, so we've already got the debit balances and the credit balances at the top of your column, so you don't have to fool with that. So we're just gonna go through and list our accounts. We got cash, 2,065, and it's a debit. We got accounts receivable. $27.20. You've got supplies. $760. Prepaid insurance. $2,200. Office nope, sorry, skip one. Land, 20,000. 20,000. Office equipment. $1,800. Accumulated depreciation, office equipment. And as you're kind of rocking along, don't get so used to putting stuff in the debit column that you forget that one's supposed to go to credit. Accounts payable. $900. Wages payable. You see? $250. Unearned rent, $240. And the last thing we'll have is Chris Clark Capital. What did we end up with? 28,105? Okay. So that's all we got. We don't have to put all that other stuff on there. Zero. So we're not going to list it. There's nothing left. It's a zero balance. You don't have to put it on there. So the next thing you do is what? I mean, it's great that we got the accounts listed there, yeah, but if we're not going to add it up and check to make sure we're in balance, then it's kind of like, what was the point of that? So add your columns and let's get totals and see that they're in agreement. Get the same thing? What'd you get? 29,545. Everybody else did the same thing? So that's good, right? Good to have the same numbers. You put it where? That's okay. Your cash?
Yes, ma'am. It's like a big.
Oh, up here?
Yes, ma'am.
Well, worst case scenario, if you do that on a test or something, just put the balance above it or something, draw where it's supposed to go. You ain't got to sort over on the test. Okay. Does that help make more sense? Okay. So the next thing we have in here is just another closing entry. But we can go ahead and go through the motions and just practice them, I guess. All right, so we've got this next problem here. After the accounts have been adjusted, so we're not going to do this before we do our adjustments, or else we'll end up with balances in our accounts again. They've been adjusted at March 31st, the end of the fiscal year. The following balances were taken from the ledger of Vantage Design Services. This should say, journalize the entries necessary to close the account. At all. Okay, so her year end is March 31st, correct? All right, so what's the first thing we're gonna do? On the first entry, what are we gonna do first? Debit the income. So what's my income? What's my income account? What's it called? Yeah, it's not a trick question. I'm sorry. Sometimes it seems like it's too simple of a question. I do that like more for repetition so that it's burned in your brain. All right, so my amount is $364,000. Am I debiting or crediting? Would I debit or credit this amount? Debit, because I'm trying to get rid of it. All right, what's next? Really, it could be any of your expenses, but I would do them in order just to be sure I didn't miss one. We just want to be sure we pick up all the expenses. So it's easier for you just to list them and then go in there with their numbers. That's fine too. Okay, so we will credit wages for $28,000. Credit rent for $24,000. Supplies for $39,450. And miscellaneous for $26,60. Okay, so what do we do next? Because I have a lot of students just kind of stop there when they're doing these entries. We got to add up the expenses, subtract them from our fees earned, and then that amount goes to. So what's that going to be? The amount. And as you're working in Cengage, it might not be a bad idea to figure out first if you have a net income or a net loss. Because then if you have a net loss, you can go ahead and put that debit in there rather than having to go back and re-enter all that stuff when they tell you that they're in the wrong order. You know what I'm talking about, right? All the debits first, then the credits. But you can kind of look at it and say 3 plus 40. It's a little bit, or it's around 100,000 in expenses or so. So you can see you're going to have net income, you're going to have a credit that you need. Anybody got the amount? $269,890. Anybody got it? Okay, good deal. All right, so what's my second entry? What am I doing in the second entry? What now? Yeah. Okay, so we're going to debit Kathy Edwards' drawing. I can't exactly hear what you're saying, but I think it sounded right. Kathy Edwards' capital in the drawing. Is that what you said? remember, we're crediting drawing because we want the balance to go away. If you start to get confused on it, remember the goal of these things is to zero out the balances. So we're gonna do the opposite of what we normally do just to record transactions so that we can get rid of the balances. Does that make fair, decent sense? Okay. That's a wrap for the day. We'll finish the rest of this chapter on Wednesday, which y'all will be watching, I guess. And then we'll review some on Friday, and your test will be next week on chapters 3 and 4. So what I'll do is I'll post those times out there where you can sign up for a time to come take it. And then I'll notify you when it's out there, when it's up and available, so you can sign up for a time that works for you.
Are we up Monday, Tuesday?
We are out Monday. Crap, that throws a monkey wrench in things. Okay, yeah, it's a holiday, isn't it? Fall break or something? Ma'am? Who said something? What'd you say?
I didn't know we even got to consider that we'd be out on the Monday.
You know, I thought that we weren't going to get any holidays, and then we got Labor Day. So, there was so much mixed information going around for a while. But I think if it's on the calendar, then we're getting it because they said that the calendar was set. We were sticking to it. So, I'm assuming we are. If I find out that we are not, I will let you know. So, I will have to figure out. I may have to just put more than a couple of days out there for you to sign up for. And if it doesn't fit into what works for you, then you just get with me and we'll figure something out, okay? Y'all have a good one.
So you said that's next week?
That's next week.
Yes, ma'am.
That is correct.